It's Introduction to Foreign Exchange. Welcome to my session. We'll start the sessions. It will be a quiz type, question type, and it will help you. And it will help you for the promotion test up to scale 5. So again, welcome to my session. First of all, now when we'll be coming to foreign exchange, we will discuss here to understand the meaning of foreign exchange, foreign trade and foreign exchange. What is a foreign exchange as a stock, and management of the foreign exchange, history of exchange control in India, Foreign Exchange Management Act 1999, which is called a FEMA. Now organizational structures are there and correspondent arrangement. This actually we'll be discussing, and we'll discuss all the questions and answers also. So let's start. Mr. Tendulkar wants to import goods. Mr. Ganguly wants to export software. An investor wants to invest abroad. A foreigner visits Kerala to get Ayurvedic treatment. And an IT professional from India earns dollars while job on abroad. But its parents in India want rupees to buy a house. Now question is that what is happening here? See, they have left cricket. Tendulkar now is importing. Whenever the imports are there, what will happen? The goods will be coming to India. In exchange, we have to send foreign exchange in abroad. Mr. Ganguly left cricket. So what? He is an exporter now, exporting software. When the software of exports will be there, so foreign currency will be coming to India. An investor wants to invest abroad. He wants to invest abroad. You can buy shares in abroad in a stock exchange, which is listed in the stock exchange. So you have to send foreign currency abroad. Foreign exchange it will go, and investments will be done in abroad. A foreigner visits Kerala. You know, Ayurvedic treatment is a very good treatments. They do it in Kerala. So whenever they come, the foreigner visits, they have to give a foreign exchange to where they do this treatment. An IT professional from India earns dollars while job on abroad. What happens? His parents will be getting foreign currency. When they will be getting foreign currency, what will happen? Now they have to exchange it. So this currency conversions is a very important part in foreign exchange. And after that they will want rupees too, and converting from foreign exchange, rupees will be there, and they will buy a house. So all foreign exchange transactions, exchange are taking place here. Now we are coming, it's an economic transactions between residents of two countries, involve exchange of one currency into another. So it's an economic transactions, residents of two countries it is happening, involve exchange of one currency into another. The source of purchasing power is available in one currency, it used in another currency. So we are exchanging it. Currency has its geographical jurisdictions. Rupees, hard currency, we cannot use in other country. So we have to exchange when we are crossing the border. So this is a currency which have a geographical jurisdictions. Now this is a picture just I am showing to you. Now what is happening here? Now what is happening? It is transactions are executed, the intermediations of the banks are there, and currencies are converted. So transactions are executed, intermediations of the banks are there in between, currencies are converted, all the three things are happening. Now this will be now my question is what the term foreign exchange refers. Now what the term foreign exchange refers, this is actually, you can ask yourself, what is the foreign exchange refers? Process of conversions of currencies. The foreign exchange refers the process of conversions of currencies. A legal tender cannot function, but here serves the purpose of exchange values. It serves the purpose of exchange values. Now this is a difference between foreign trade and foreign exchange. What is the international trade then? Now my question is, what is the international trade? So now it is a trade between two countries. It is happening between two countries. These have some peculiar problems, different monetary units in different countries, restrictions imposed on import and export. Suppose you have exported goods, some persons from the importing country has to give it to you, but regulations are there, the balance of payments is not favorable in that country, the importer wants to make payment, but the restrictions are there in the country, economic conditions it imports. Now restrictions of payments will be there, and difference in legal practices. See, we have a different legal practices in India, it is in USA it is different, China it is different. So here ICC, International Chambers of Commerce, plays a very vital part. If I tell you one small incident, so here ICC, suppose LC we are opening, so what they are, so under UCP 600 you have to issue the LCs, and the court also has to give verdict on the basis of this UCP 600. So this legal practices, know how this ICC came in the picture. ICC, International Chambers of Commerce, was headquarters in Paris. So they come in lot of instructions, lot of legal practices they have done. Later we will be discussing this point. Now, bank maintains stocks. My question is, bank can maintain stock? Now we are coming to these two residents, it's a peculiar problems, different monetary units, restrictions imposed on import and exports, restrictions on payments, and difference in legal practice. So now we are coming to definitions. Foreign currency, what does mean foreign currency means? It is deposits, credits and balance payable in foreign currency, demand draft, travelers checks, letter of credit, LC means letter of credit, bill of exchange, expressed or drawn in India, or a demand draft, TC, travelers checks, letter of credit. Later I will be discussing all those points. Letter of credit, bill of exchanges, checks drawn outside India. We can draw outside India also. So foreign currency includes foreign currency, balances kept abroad, instrument payable in foreign currency, and institute drawn and instrument drawn abroad but payable in Indian currency. So foreign exchange, can we create in the country? What is your answer? Yes or no? So what it should be the answer? You just ask yourself, foreign exchange, can we create in the country? I do not know. Somebody will tell yes, somebody will tell no. So what will be our answer? Our answer is no only. Our answer is no only. Now then how we create it? We can, how we create it? So we can create controlling or regulating required of the foreign exchange. We cannot create, how we create? We have to control or regulate required of the foreign exchange. Now management of the foreign exchange of the world perspective we will discuss very shortly. Very short, we will discuss it. It's a rare commodity. Strict control in all the countries, because somewhere imports, exports will be more, imports will be more. So there will be a management of the foreign exchange. Till 1970s, exchange control was the order of the day. Now exchange control was the order of the day. Now we manage exchange. The origin of traced in 1930s. Actually it's originally traced from the 1930s. After First World War, if you go to the history back, European countries found depleted gold reserves and foreign exchange put restrictions after First World War. Since then exchange control started. At 1990s the globalizations and liberalization started. Then started relaxing exchange control. Picture was different on 1970s, and at the after 1990s that globalization and liberalization started. It has been relaxing exchange control. So now we'll come. It's a history of exchange control in India. First it was a FERA 1947, then it came FERA 1973. Stringent conditions was there. Liberalizations period started 91-93. Now we'll come to a period where a history of exchange control. In winter sessions in 29th December, Parliament, it was passed in the midnight. In 1st June, from 1st June 2000, 1st June 2000, that FEMA started 1999 in India. So it was passed in winter sessions of the Parliament on 29th December 1999. So we call it FEMA, Foreign Exchange Management Act 1999, but it started on 1st June 2000. Now, what is the basic difference of FERA as well as FEMA. First is FERA. If you take it as a FERA, now FERA 1973, it was a very conservative. It's a regulatory in natures, and burden of proof lies on a person whom guilty is presumed. So burden of proof has to be lies on the person, he has to give a proof. Now it has been totally changed in FEMA 1990. You see, from conservative it is a control management now, and it lies on the enforcement agency. Suppose the case has been given to enforcement directorate in the court, civil court, they has to give a proof that there is a FEMA violations. There is a FEMA violations. So this is the basic difference. In short, we have told for your examinations point of view. This is actually this video which I am showing to you. It's a examinations point of view, and we will be discussing on the questions also. Now, who are the participants in the foreign exchange? Actually, customers, commercial banks, central banks. In India it is India it is an RBI, Reserve Bank of India, and exchange brokers are there. They are the recognized of different banks. This exchange brokers plays a very vital role. In overseas market, it is opened. It is open 24 hours. You see it. Now first, it is a 24 hours business, starts with Tokyo and Sydney. Then it goes to Singapore. Then it goes to Hong Kong. Then it comes to India. Then it comes to Bahrain, Frankfurt, Paris, London, New York, which is a huge transactions all over the world. They plays a very vital role from London to its New York. Again, it is in San Francisco. So now we are coming to questions. We'll discuss the questions and we'll discuss the answers also. Now, what do you mean by you should be very attentive, and if you go through this video, you will come to know whatever the examinations you are what answers you can give it. Only you have to see the video. So first question is, what do you mean by the FEMA? So mean by the FEMA means it is Foreign Exchange Management Act. So answer is D. Now we'll come to the second questions. What the act was passed in Parliament? Act was passed in Parliament. I have told you already, it is in 29 December 1999 in the midnight. So answer is C. We'll go with C of the question number 2. Now this is just we'll discuss another part, that is organizational structure in India. First is Government of India, it is there. Then is a Ministry of Finance. Then it's a Ministry of Commerce which plays a very vital role. Now what the Ministry of Commerce do? They do the trade control. And what the Ministry of Finance does? It is an exchange control. So Ministry of Finance does the exchange control, and your Ministry of Commerce does the trade control. Now here is the Ministry of Commerce. Ministry of Commerce is the Foreign Exchange, Trade, Development and Regulations Act 1992 is there, and we are having a foreign trade policy 2020 to 2025. 5 years validity is there till March 2025 it will be validated. And this is the DGFT, Director General of Foreign Trade. What they do? They actually gives the export of import code, or sometimes they give the, if the restricted goods are there, they give the licenses also. So now we'll come to the next slide. This is our organizational structure, where a Ministry of Finance it is there. Under Ministry of Finance, Reserve Bank of India, I told about earlier slide, central banks are there. In our India, central banks means RBI. What the RBI does? Here comes the customs under Ministry of Finance. What the customs checks the documents whenever you are exporting or importing, and they give a certificate as a bill of entry for the imports, and exchange a control copy for the exports. Now we are coming to a slide which is questions only. Now my question number 3, which government body monitors FEMA? Now you think of the answers. Which answer is C. We will go with C, RBI, Reserve Bank of India. Now this is actually now the fourth question. What is the objective of this FEMA 1999 Act? It is repressing FERA, preventations of the money laundering, control imbalance of payments in India, facilitating external trade and payments, and prompting development and maintenance of foreign exchange market in India. So we will go with D, because everything has been covered here. Facilitating external trade and payments and prompting development and maintenance of foreign exchange marketing in India. We will go with questions number 4. Answer is D. So we will come with the next part. Now, what is definitions of non-resident as per FEMA? Foreign Exchange Management Act. FEMA has 2 classifications for the residential purpose. One is resident in India, one is resident outside India. NRI who is staying abroad. Now, the resident means you people, we are working in a bank and we are staying in India. Now, we will come with the definitions. We will later discuss it also. Now, question is, who is NRI? Now, a question, who is NRI? A person resident outside India who is a citizens of India. Who is a citizens of India or persons of foreign origin. One time father, mother, grandfather was staying, having Indian, is an Indian citizen. And section 2 Roman W defines persons resident outside India means a person who is not resident of India. So now we will come with some clarifications here. Now, who are the residents? Can you define as per section? This is the sections I am quoting you. Section 2 Roman 5 and small 1 of Foreign Exchange Management Act FEMA 1999. Who are the residents? Who are the residents? This comes the slide. A person residing in India for more than 182 days during the preceding financial year. If a person stays more than 182 days in the preceding financial year, will be till as a resident. Now I am telling you, suppose a foreigner has come to India, taken a job in an university as a professor. As a professor, he has taken a job for 5 years contract. Now, when he will be considered as a foreign citizen or resident of India? Now, it is very clear he will be considered as a resident of India, and whenever he comes to India, touches Indian port, Indian soil, he will be considered as a resident of India. So, this is the exceptions of the rule. This is the exemptions of the rule. Now, a person is going for education purpose, he is called as an NRI, but when he will be an NRI? He has to wait for 182 days? No. Whenever he leaves Indian soil, touching foreign soil, he will be considered as a NRI, non-resident Indian. These are the exceptions of the rule. We will come to know later. Now, we are coming with the questions number 5. What is the period that as resident to be in India in the preceding financial year? What will be your answer? Answer, what we should go? We should go with the number C. So, question number 5 is number C. Now, we will come number 6. If a foreign citizen who stayed in India for employment, business, etc. for an indefinite period of stay will be considered as a resident. Now, you read the question carefully. Whenever the exam, promotion exams will be there, you have to read the questions. In between the answers will be there. So, if a foreign citizen who stayed in India for an employment, business, etc. for an indefinite period of stay will be considered as a resident, we will go with as a resident A. So, 6 is answer is A. Now, we will be going with the what is called a non-resident Indian nationals. A person who goes abroad out of India or stays out of India for taking up employment, for carrying on outside a business or vocation outside India, or for any other purpose in circumstances as would indicate his or her intention to stay outside India for an uncertain period. So, here this non-resident Indian, now in a graph I am showing you, non-resident Indian means a citizens of Indian origin, of Indian or Indian origin. So, citizens of Indian or Indian origin, both are saying resident outside India. So, again I am repeating, citizens of Indian or Indian origin are called non-resident Indian, all are residing outside India only. Now, we come with the next slide. Question number 7. An Indian resident becomes non-resident for the purpose of FEMA in case A resident becomes non-resident when it is C. He goes abroad for studies but takes employment therefore after the studies. Answer is C, because when you are going for an excursion, we will come back after 7 or 10 days. You are gone for a medical treatment after 20 or 30 days or 40 days, you will be coming back. You will not be considered as a non-resident. You have status will be resident only, but question 7C is the correct answer. Now we will go for the question 8. A foreign national is of Indian origin, if both his parents were born in India. A foreign national is of Indian origin. So we will go with the question number C. Any one of his parents or grandparents was Indian national. So answer is C for question number 8. You have to read the questions and then answer. We will go for question number 9. An existing account of a resident who goes abroad for gainful employment and for uncertain period will be termed as, we will go with the question 9. Answer is B, non-resident ordinary account. An existing account of a resident who goes abroad. Whenever you are going abroad, before going abroad you are having a savings bank account, and the savings bank account it will be transferred to non-resident, the ordinary account, that is NRO SB account. So your domestic SB account will be transferred as a NRO SB account. 10. The term deposits can be opened in answer is D, all the above. It can be NRO, it can be NRE, and it can be FCNRB account. Now we are coming that NRI accounts, actually we have to divide, we maintained in Indian rupees and we maintained in foreign currency. Whenever we maintained in Indian rupees, that is a non-resident ordinary account and non-resident external account. It is in Indian rupees. Suppose this money should come, all this accounts money should come from abroad. Suppose your customer has sent telegraphic transfers to credit to his or her NRO account. You have to convert it. So conversions are taking place in case of NRO and NRE. But whenever, suppose a person, your customer has sent $1 lakh to give a credit, and you have to open a term deposit account, because whenever the customer instructs, you have to follow. A telegraphic transfers has been sent that this $1 lakh you have to maintain in term deposit. So what is our product? Yes, you can open a FCNR, foreign currency non-resident, and banks. What do you mean by the B? It is banks only, because bank is taking the risk here. Bank earlier in above 90, see year 75 it has been changed. Earlier RBI has to take the risk, notional rate you have to transfer it, this that happens, but after that it has been totally changed. Now bankers has to take the risk, and you can open term deposit. Foreign currency RFC. RFC means what? A person wants to settle permanently, that is an NRI who wants to settle permanently, and he will getting pensions, gratuity, he will be getting a rent because he has purchased a flat in abroad. All these things will come to foreign currency, and he can maintain savings bank account, he can maintain Forex deposits and other accounts also. And here comes the RFCD. RFCD, later when the questions will be discussing, we will discuss this part also. So Indian rupees we can maintain NRO and NRE, and foreign currency we can maintain in FCNRB. RFC, resident foreign currency, it is D. D means domestic. So we will come with the next slide. Next slide we will discuss some questions, and if you carefully see my questions, all the questions, this type of questions will be coming to you, coming from promotion exams, and from scale 1 to scale 5 everything has been covered here. So non-resident external account can be opened by which? Individuals only, individuals as well as companies. What will be the answer? We will go with the answers. Answer is A, individuals only. Now 12th, opening of an account with eligible local funds is allowed in case of which account? We will go with none of the above. Opening of account, the money should come from abroad. It should be telegraphic transfers, demand draft, foreign currency, all should come from abroad. inward remittances in a proper banking channel, money should come. So here we will go with none of the account. So answer is D. 12 we will go with D. Now 13, FCNRB accounts can be opened for a period of 5 years maximum, and if it is a fixed deposits, it should be 1 year. If it is a compound in nature, it should be minimum 1 year plus 1 day. So it is 5 years maximum you can open, minimum is 1 year. The maximum period for each FCNRB account can be opened, it is D, 1 year. I already have told you, from 1 year to 5 years. The exchange risk, 15. The exchange risk under the FCNRB account is borne by whom? You should think of the answers. Now we are coming with the answers. Answer is A, the bank maintaining the account. For that reason, FCNR, B means bank. Bank is taking the risk. An FCNRB account is opened for euro 50,000. On maturity, the deposit is repayable in how it can be? Euro only, euro or US dollars, US dollar only, or any currency. We will go with number D. So question 16, any currency other than non-convertible rupees, answer is D. Now remittances. Now just we have touched the deposit part. We are coming to remittance classifications, capital account, current account. There are two type of accounts are there. What do you mean by the word capital? Now capital means what? Capital means what? Here actually, whenever we are going to capital account means, so whenever an Indian citizen's asset and liability is changing in the foreign soil, and whenever the foreigner asset and liability is changing in Indian soil, so this asset and liability is changing. So that is a capital account transactions. Other than capital, as per FEMA, it's all our current account transactions. Suppose you are going abroad for a tour purpose, it will be current account only. So these are differences we have made as capital account transactions, where is the change in asset and liabilities of a person staying in India, resident in India, abroad, as a foreigner, asset and liabilities changing in India. And other than capital, all are current account transactions. Now FEMA guidelines for the current account transactions, Schedule 1 is totally prohibited. Schedule 2, you have to go to the respective ministry, central government ministry, and take the approval. Then you can have a transactions, you can go to the bank. After the approval, bank can give the exchanges to you. Schedule 3, this is a above stipulated amount. Schedule 3 actually any authorized dealer can give exchanges under Schedule 3. Sometimes we have to above stipulated, sometimes we have to go to RBI. So Schedule 1 is totally prohibited. What do you mean by the word prohibitions? Ball play, games, lottery, these are all the prohibited transactions. Now Schedule 2, you have to go to the respective central government ministries, and Schedule 2, all authorized dealer, except some few cases we have to go to RBI on the stipulated amount. Now what do you mean by the Schedule 3 and to whom it has been delegated? It has been delegated authorized dealer banks. Answer will go with B. Now 18, in terms of dual exchange as per Schedule 1, certain categories are permitted. No, it is not permitted, it is expressly prohibited. We will go with answer C. Now we will come to question number 19. Out of overall foreign exchange, US dollar 2,50,000 been sold to a traveler going to Libya. Now this US dollar 2,50,000, later I will tell you what is the 2,50,000 that we have given to you. So sold to traveler, Libya, it is answer is Libya, and this is actually is B. We can give $5,000. Other countries, Soviet Russian countries, we can give up to 2,50,000, comes under LRS, liberalized remittance scheme. What do you mean by the word liberalized remittance schemes? A person, individual, we can get the benefits of sending remittances, and they should have a PAN card. US dollar 2,50,000 and equivalent money they can send under capital and current account transactions. If it is a capital account, it can be clubbed, and capital account, current account also it can be clubbed. And whenever suppose a husband wife wants to purchase a flat in abroad, it can be clubbed. So $5 lakh or equivalent amount can be sent for purchasing that assets. So here the answer this Libya in Iraq, we can give it 5,000. Other countries it is 3,000 US dollars and equivalent, and Soviet Russian countries you can go up to US dollar 2,50,000 and equivalent. So your 19 answer is B. How much a resident is allowed to take INR? Nepal, Bhutan, we cannot take, there is no limit, no limit. So your answer is C. We are here actually just 25,000. Nepal and Bhutan you cannot take any currencies, but whenever you are going to other cities, other places, you can take 25,000 Indian rupees with you. So how much a resident Indian is allowed to take INR to other countries? 25,000 Indian rupees you can take, other than Nepal and Bhutan where we cannot take it. Now which form we have to obtain from traveler releasing currency from the NRI? This is a form A2, we will go with C. Now to which department of Government of India the dance troupe artist should apply for the foreign exchange while undertaking tours? This is a we have told you already that it has to go to the respective ministry. Answer is B. 22 we will go with B. Now 23, what is the maximum eligibility for private visits to abroad? What is the maximum eligibility? We will go with B. 2,50,000 and equivalent Forex. I have already told you under liberalized remittance scheme, we can take 2,50,000 and equivalent Forex in a financial year. 24, for going abroad on employment, immigrations, how much a person can draw foreign exchange? So how much we can draw? It is US dollar 2,50,000. We will go with C. Question number 24, answer is C. The individuals having proprietorship firms, what is the maximum drawal amount while visiting abroad? We will see. What is the answer? It should be, answer is US dollar 2,50,000. Answer is C, not B. Answer is C, because B is rupees 2,50,000. Rupees is 2,50,000. Now this is actually a proprietorship, this is individual, and they can also take it. We will go with C. Now 27, if a resident individual going abroad for medical treatment and submit an estimate, see, up to estimate means a doctor has to give us, suppose a person is going for a medical treatment in Singapore, they have got an estimate of $6 lakhs, you have to take the document. What is the document actually? That hospital authority from Singapore or a doctor in abroad or a doctor in India or a hospital in India have to give a document. That document is a proof, and you can take the documentations, you have to take it from the customer and you can disburse the required amount. So your answer here will be C, whichever is more, because your $7 lakh which I have told you it is more, so you can give up to what amount estimated. 28, the resident individuals for studies abroad for purchase of foreign exchange under LRS of US dollar 2,50,000. What documents required other than applications? Is form A2. It's very simple. Answer is C. 28 we will go with C. 29. Which account a resident individual in India can open, hold and maintain with authorized dealer out of foreign exchange acquired in the form of account a resident individual? What I have told you? Resident foreign currency. A person has gone abroad for a specific purpose, a resident, and he has come some honorarium. He can put it in RFCD while coming back, or in India he can receive that money and he can put it in RFCD. So resident foreign currency domestic account, it will be in current account only. It can be made by the resident individual. 30. What is the, this is C, RFCD, it is C answer. What is the limit of authorized dealer may accept in cash amounts against sale of foreign exchange? It is rupees 50,000 only. Answer is C. Now 31, up to what amount authorized dealer one banks can release a Forex in the cash for travelling, proceeding for the Hajj pilgrimage? It is up to the cash limit specified by the Hajj Committee of India. Answer is B. Now we will go up to how much Forex can be released for travel to Nepal or Bhutan. You can release as an authorized dealer, you can release. No, Forex cannot be released for travel to Nepal or Bhutan. So answer is C. Now we are coming to 33. An NRI resident in Dubai has come back to India to settle permanently. Which of the following account as a banker? As a banker, which will be suggestions? Because customer has come to deposit money, he will be getting after retirement or whatever may be. He will suggest as per FEMA 1999 to keep his present and future earnings. Suppose I have already told you, suppose he has purchased a flat in that foreign country, rent can come in foreign currency. Facility of future repatriation facility, it can be repatriated also. So there will be a conversion sometimes, and this is very important, where earlier I was discussing about the conversion. Now another word you have got it, that is repatriation. What is mean by the repatriations? A customer has put the money, suppose in FCNRB, he can repatriate. Money can be sent, but from NRO money cannot be repatriated. For normal courses, for other also some permissions are required, later I will discuss. So repatriations facility and to earn interest thereon. What will be your answer? Answer is D. This is resident foreign currency account. He wants to settle permanently in India. You can open resident foreign currency account, SB, deposits, anything, any term deposits, any account you can open. Foreign currency fluctuation risk is borne by the customer in which account? Is D. NRE. Customer, FCNR, bank has to take the risk. EEFC account, exchange earner foreign currency. This is an RFC domestic. All are borne by the bank, but NRE, rupee account, it will be borne by the customer. 35. Funds lying in EEFC account, exchange earner foreign currency account can be used by the account. It is simple, it is a current account only. Exporter has sent goods abroad, suppose $1 lakh, he wants to keep it in foreign currency. He can keep it in a current account mentioned as an exchange earner foreign currency. For his future course, he can make the expenses. So here what should be the answer? Answer is E only, A to C. It can advances to overseas importer. He can import and give money, debiting EFC account, giving trade related loans outside India, repayment of the pre-shipment credit. Later I will discuss this pre-shipment also when I will take the exports. Which among the following amount is allowed to be repatriated under the redeposit account of the NRIs? Answer, we should go with D, the amount of principal and interest thereon. Now we will come with 37. Up to what extent of debits can be allowed by the authorized dealers for remittance from no account of NRI persons of Indian origin representing sale of immovable property? Answer, we will go with 1 million in a financial year. They have to take a clearance from the income tax, and after that a chartered accountant should sign, and it is a soft copy they will be downloading and from the income tax site, and chartered accountant will sign, and that certificate they will be bringing to bank. Bank can give 1 million in a financial year. This money can be credited, money can be sent abroad, or in India it can be credited to NRE, FCNR and other accounts of a customer debiting NRO account. Answer C. Here what is happening? Authorized dealer remittance from no account NRI PIO representing sale of, this is a NRO account. So NRO account, how much it can be debited? 1 million in a financial year. Answer, we will go with C. Which of the following credits can be credited? Any credit can be credited to the NRO account. We will go with D. D is the correct answer. For this normal way, the repatriations, you cannot debit the account and cannot repatriate the money in case of NRO account. And taxes are there, income taxes are there. With the interest, we have to deduct tax, but NRE taxes are not there, FCNRB taxes are not there. 39. A persons of foreign origin, a foreigner opens an NRO account. You know, the tourist comes, we can open an account for them while visiting in India. What should be the answer here? Answer is D here. A person below which is not correct. This is not correct actually. D is not correct. Nostro. Nostro means what? Here answer is foreign currency account of an Indian bank abroad. When Bank of India opens an account in abroad, in foreign soil, in foreign currency. So foreign currency account of an Indian bank abroad, we will go with B. 40, answer is B. Now we will go to 41. The visits of a resident India to which of the following countries are not eligible obtaining foreign exchange? Already you come to know which is the answer. With the answers will be, we will go with D, Nepal and Bhutan. This, which of the following we are not eligible? We are not eligible at all. Canara Bank opens a current account with a Citibank, New York for its day-to-day business transactions in US dollars. Which of the following kind of accounts it will be known to Canara Bank? It is a Nostro account. It's a Nostro account. Answer is B. Now, which accounts are called your account with us? You come to know the answers. Answer is B. It's a Vostro account. Current account full convertibility, when it has happened, you know, in our country, current account full convertibility has happened in August 1994. Your answer is C. But capital account full convertibility has not been happened in India. So, this particular question's answer is C. Which of the following does not match in case of drawal of foreign exchange by the residents? Which does not match? C is the correct answer, because the Schedule 3 transactions with permissions from the RBI. C is the correct answer. Foreign currency non-resident banks accounts can be opened in the name of the following. So, your answer is A, non-resident. You can open for them only. A non-resident account can be opened by which of the following? It is answer A. Answer A, Indian National Gun USA for this my questions, you read the questions. Account cannot be opened, A person has gun going to USA for medical treatment. They cannot open any non-resident account because they are resident only. The foreign exchange risk shall be borne by whom? Answer is C, FCNR. Bank is bearing the risk. Now, joint operation, joint account with a resident can be opened by a NRI. Number 1, in which of the following clause? Number 1 or survivor? Number 1 or survivor. That means NRI is number 1 and maybe a resident is number 2. You take it as a husband is NRI, number 1, wife is number 2. As a resident, it will be number 1 or survivor. It can be NRO, it can be NRE, it can be FCNR. So, answer will be D. So, now we are coming to questions. An NRI residing in USA has come back to India to settle permanently. Which of the following account would be opened by him to keep his balance in foreign currency? Already we came to know which will be the answer. Answer is, we will go with A, resident foreign currency account. 51. Which of the type of account cannot be opened by the person resident in India? Which of the following type of account cannot be opened by a person resident? You have to read the questions correctly. Persons, the tricks are there on the questions itself. By a person resident in India, which will be the answer? Answer is D, all the above. The resident cannot open RFC by a person resident. Which of the following type of account cannot be opened? What is the maximum amount that can be deposited in EFC account? So, it is 100% you can deposit. C is the correct answer. What is the maximum limit up to which a resident individual can make investment under overseas direct investment? LRS, already I have told you, individual can send remittances and a PAN card they should have. So, ODI LRS means here what will be the answer? Answer is B, US dollar. Make a investments. Actually, your answer is B, US dollar 2,50,000. Already I have told you the answers. Now, who regulates the foreign trade policy in India? Who regulates? It's a Ministry of Commerce. Already I have showed a slide, Ministry of Commerce. Now, who regulates the foreign trade in India? Who can regulate the foreign trade? It is RBI, it is DGFT, it is FEDI, Foreign Exchange Dealers Associations of India, or SEBI? No, your answer is B only, DGFT, Director General of Foreign Trade, who regulates. That means, who regulates the foreign trade policy in consultations with the government? That is Ministry of Commerce. And who regulates the foreign trade in India? It is DGFT, Director General of Foreign Trade, who gives export-import code, who gives the licenses also, the imports of goods which is restricted in nature. What is the resident status of a student from India having gone abroad for the studies purpose? For a studies purpose, it is B, a non-resident Indian only. Now, An NRI has been issued a credit card by our bank. The balance drawn by him under the card shall be adjusted by which of the following? Now, what you suggest the answers? From anywhere you can debit. So, your answer is A. Now, 58. If an NRI is having a non-resident external account, that is rupee account, a term deposit and return to India. If an NRI is having a non-resident, what will be its status of that non-resident NRI account? Term deposit and is returned to India. The account will continue till maturity. The account will be closed, treated as a domestic deposit. This it will be closed and treated as a domestic deposit because he wants to settle permanently in India. The account will be converted as a resident foreign currency deposit, RFC deposit, or any one of the above. So, we should go with number D, correct. So, now transfers between NRO accounts of the same NRI customer is what should be your answer? It is not permitted. It is permitted at the bank discretion. None of the above. We will go with B. It is freely permitted because one NRO account from one bank it is going to other bank, means within India. It can be possible. So, it is freely permitted. Answer will go with B. Now, it is a 59. We will go with B. Meaning of exports. Now, we are coming to the exports. What do you mean by the word exports? Exporter and export obligations. Sending goods or taking outside India. A person come to India can take goods outside India, or we are sending, exporter is sending goods abroad. It can be goods, it can be services. It can be goods, it can be services, either way of land route, sea route, air route or electronic media. And it can be sale, it can be lease, or it can be hire purchase. Now again I am repeating that one, sending or taking outside India goods or services, either way of land route, sea route, air route or electronic media. And it can be sale, it can be lease, or it can be hire purchase also. This hire purchase lease will be considered as an export only. Packing credit. Now, what do you mean by the word packing credit? See, this exporters will be before prior to the shipment. You know, packing credit we can give on the basis of the letter of credit which the exporter has received from abroad, or that they have got an export order. So, it is a credit prior to the shipment for purchasing raw materials, processing of the goods, manufacturing and packing of the goods till the goods are put it on the board of the ship. So, it is a credit prior to shipment for purchasing, processing, manufacturing, packing of the goods, then the goods still are goods put it on the board of the ship, or in the airport authority goods are handed over till it is called a packing credit. Now, packing credit we can give it in Indian rupees, we tell it PC, packing credit, or if we are going with a foreign currency, suppose exporter wants to bring raw materials from abroad, we can give it in foreign currency. It designated currencies as a pre-shipment credit in foreign currency. Here conversions is not taking place. The exporter will use the PCFC, maybe import of, you take an example, maybe import of raw materials. Now the questions we are coming 60. Question number 60, we have started exports, we will touch exports also. Pre-shipment credit can be allowed on the basis of which of the following? Letter of credit opened in favors of the exporter or any other person. That means letter of credit issued from abroad by the importer banker and it has been received by the exporter. And what do you mean by the letter of credit? Here I am touching that part also. Letter of credit is an undertaking on behalf of the importer customer that the documents which will be produced is as per the terms and conditions of the letter of credit. We will make payment. Banker does not deal with goods, we deal in documents. So, letter of credit open in favors of the exporter or any other person. It can be confirmed or irrevocable order for the export of goods. So, letter of credit open in favors of an exporters also. So what should be the answer? Answer is D, any of the above. You can give pre-shipment credit, but you should be cautious whenever you are giving. You should receive the original letter of credit when you are giving a pre-shipment credit. Specific approval list on the exporter is issued by whom? It is issued by ECGC, Export Credit Guarantee Corporations. It is 100% central government and is the ministry, and it is headquarters in Mumbai. So this they actually take the risk of the exporter. It can be risk in the pre-shipment as well as post-shipment. So ECGC plays a very vital role for this exporters taking the risk. So ECGC, answer is C. Now we are coming to exporters caution list. Caution list, who has given it? It is given by the Reserve Bank of India. Restricted cover countries list is issued by whom? It is issued by the ECGC. So specific approval list, it is given by the whom? It is given by the specific approval is by ECGC, and here exportation caution list by B, that is RBI. Restricted cover countries, this is ECGC. The period of export credit is restricted to, it is a 360 days. The pre-shipment credit is liquidated. We have given pre-shipment credit. Now generally the pre-shipment credit will be liquidated by way of the post-shipment. That means we have put the goods on the ship and the ship will move to the destinations. After that the exporters will prepare the documents as per letter of credit or the export orders and will hand over to the banker, and what the banker will do? Banker will purchase, discount or negotiate. So when this negotiation comes, whenever you talk with this backed by the letter of credit, that is document backed with the letter of credit will be called a negotiation. You should not utter the words when it is a non-LC document. Non-LC means purchase and discount, that is sight and usance. Whenever it is a negotiated means LC, the document is backed by the letter of credit, it is a negotiations only. So the pre-shipment credit is liquidated out of converting pre-shipment into post-shipment. It's very simple. Balance in EEFC account, export earner foreign currency, exchange earner foreign currency account. Proceeds are bill drawn for the export of the same consignment or other consignments. Other consignments, some bills has been drawn, that can be credited to the pre-shipment or pre-shipment liability. Other rupee resources of the exporter, we can take the money. So answer what should be? A, B, C, D. So all are correct. We will go with C, A to D all. Now you come to know what is pre-shipment and some part of post-shipment also, which is necessary for your examination purpose. If you want to know detail of this, you have to see my other videos. Now running account pre-shipment credit, later actually lot of demand was there to prepare a video. I generally like to take sessions in the classroom sessions. So I thought why not, for the benefit my own friends, prepare some video which will be benefited for this promotion exams. Now running account pre-shipment credit is permitted. Which of the following is incorrect? It is D, all the above. Its period of individual credit not to exceed prescribed 360 days. Adjustment is on first in first out basis. It is first in and first out basis. Pre-shipment credit can be adjusted from proceeds of those exports for which pre-shipment credit not availed. Suppose one pre-shipment credit we have not taken, but we are taking a post-shipment, it can be credited in the running account. So answer here is D, all the above. Before discounting the export bill, the branch has to verify. B is the correct answer actually. B is the correct answer. 68, in case of ECGC, post-shipment finance, the ECGC premium, post-shipment finance, who has to bear? Bank has the, so we will go with B, paid by the bank. But in case of pre-shipment, the exporter has to, we have to debit customer's account and we have to set the premium to the ECGC, Export Credit Guarantee Corporations, and they will take the risk. Now we are coming to 69. Export documents to be submitted by the exporters to bank within 21 days. We should go with number C. So 69C is the correct answer, 21 days. An exporter of Bharat Commercial Bank receives a letter of credit issued by a bank in Singapore for export jute bags. The condition stated in the FLC that exporter can negotiate documents with Indian Commercial Bank only. This is FLC stated, it is purely a restricted letter of credit, means restrictions are there, they have to go to Indian Commercial Bank only. So this is called a restricted letter of credit. Now what do you mean by the red clause? Red clause is here B. Red clause means that is the pre-shipment, they will be entitled for the pre-shipment credit. Back-to-back letter of credit. Exporter has received a letter of credit from abroad. Now he tells the banker to issue a letter of credit on the security of this credit. So on the basis of the original letter of credit, another letter of credit can be issued. It can be FLC or England letters of credit also. Confirm letter of credit is a confirmations. What do you mean by the word confirmation? Now here I want to tell you, whenever the LCs are there and exporters take the confirmations of the letter of credit. What do you mean by the confirmation? That confirming bank put the shoes on the shoes of the issuing bank and gives the guarantee of the payment also. So that is called a confirmed letter of credit given by the confirmed banker. So answer here it is D. Restricted letter of credit, they have to go to Indian Commercial Bank only. 71. During COVID-19 situations, RBI notified period of realizations. It is answer is 15 months. B is the correct answer. Firms, companies and other organizations participating in the trade fair exhibition abroad can gift the unsold items to the extent of $5,000 per exporter per exhibition. So answer will go with C. In case of exporters undrawn balance, it is 10%, we will go with B. Reductions in the invoice value in the normal course is permitted, it is 25%, C is the correct answer. 75, we will go with satisfactory track record, means the exporter outstanding do not exceed 5% of the average annual export, that is C. Self write-off by an exporter other than the status holder exporter of the unrealized export bills is 10% of the total export proceeds realized during the previous calendar year. The exporter would be in the caution listed if any shipping bill against them remains open unpaid for more than what? It is 2 years from the date of export. So caution listed will be issued by RBI. And here answer is C, 2 years from the date of export means date of shipment. The request for issuance of guarantees to the caution listed exporters, bankers do not have power. We need a RBI prior approval. So by banks under the RBI delegated powers, A is the correct answer. Pre-shipment credit in foreign currency allowed at any one of the above. You can bid it Euro IBR, Eurobir, LIBOR, London interbanking offer rate, Euro LIBOR, any one of the above. D is the correct answer. Now 80. If an Indian company wants to open the office overseas, the category of banks can permit, it's a 10% of the average turnover. C is the correct answer. If an exporter requests for the change of the buyer, suppose an exporter has sent the goods abroad. Now that importer does not want to take the goods. And suppose importer A does not want to take the goods, he wants to sell it to importer B. The AD category, authorized dealer category 1, bank can allow provided there is no reductions in the value. B, reductions in value is restricted up to 25%. The realizations take place within original 9 months, actually original 9 months, due to COVID it has been changed to 15, but it is originally FEMA is 9 months. The exporter is not in the caution list of RBI. What should be the answer? Answer is B, C, D. That is D is the correct answer. D is the correct answer. Reduction maximum 25%. Realizations take place within 9 months, but COVID increased to 15 months, the exporter is not in the caution list of RBI. So answer is D. RBI has delegated powers to any category 1 banks to extend the proceeds of realizations. Export proceeds beyond stipulated presently 9 months, presently it is 9 months, but for COVID it has been extended to 15 months from the date of export up to period of, so you will go with B, 6 months at a time we can increase it. First extension should be 6 months. So 9 plus 6 it will be 15, every 6 months you can extend it, but due to COVID some changes are there, 15 months. Customs office returns to the exporter which copy of the export declarations form? So customs, exporter is going to the customs office, he will get a exchange control copy. Exchange control will be handing over the exchange control copy to the exporter, and which is required by the banker. The export declarations form used for software, it is C, it is Softex form. An exporter, Mrs. Trueback India, receives a confirmed export order as per terms of the sale agreement. Goods are to be delivered to the shipping. Incoterms you take it as a 2020 instead of 10, and we will go with answer D. It is Incoterms only, free along the ship side. FAS is the correct answer. Answer is D. Now a company dealing in rough cut or polished diamonds wants to open diamond dollar accounts. What is the maximum number of accounts they can open? Maximum 5 accounts they can open. So answer is D. An exporter has approached a banker to open a EFC account. What account you can open? Already I have mentioned you, and you just think over what should be the correct answer. Already I have told you the answer. Your answer is, correct answer is C, current account. It should be current account. The SWIFT security control to prevent automatic changes during transactions. It is answer B, checksum. Customers who deals with the international businesses are expected to obtain import-exporter code. Who gives it? Already have told you the answer. Answer here it is D, Director General of Foreign Trade, DGFT. D is the correct answer. 90. Listed country means what? Answer is D. Exporters to the country which is having balance of payments problem shall be made with a prior permission. So answer is D. An exporter should have, what they should have? They should have a ways and means to actual export of the goods. Importer, exporter code number they should have. An exporter order should be they are having, or LC should be there. A letter of credit should be in their possession. And all the above conditions should be satisfied. Answer will go with D only. So all the things they should have. Payment under reserve means what? It is B. When export documents under LC are discrepancy. LC there are, whenever they are, export documents has been given with the letter of credit, and there is a discrepancies are there, payment is to made against indemnity. B is the correct answer. Discrepancies are there in the terms and conditions what has been written in the letter of credit. So the answer is B for question number 92. SDF means what? Statutory declaration from. Answer is C. 94. Valuations of computer software through satellites links will be done by whom? It's a D. D is the correct answer. The ostensible date of delinking for the demand or side bills. It is D will be the answer. 15 days from the expiry of the normal transit period. The ostensible date of delinking for usance bill is, it's a D, 15 days from the actual due date, notional due date of bill if actual due date is not received. So we will go with D. Merchandise which can be imported into India and the eligibility of the importers is governed by the foreign trade policy. Which authority notifies under section 5 of the Foreign Trade Act? Who notifies? It is C. Already I have told you the answer. Answer is C. 97 will go with the C. Which authority is responsible for formulating and executions of the foreign trade policy, including license? Same type of questions again I have repeated. So your answer will be B. We will go with B. Director General of DGFT, Director General of Foreign Trade. 99. Which authority issues import-export code? It is DGFT. C is the correct answer. As per RBI guidelines, import bill payment has to be settled by the importer in India. Suppose import bill, when you have to settle import bill, it is 6 months from the date of the shipment you have to settle the import payment, that is import payment you have to make from the date of the shipment, 6 months from the date of the shipment. C is the correct answer for question number 100. 101. Letter of the credit LC is known as a documentary credits also. Documentary letters of credit are governed by the provisions of set by the International Chambers of Commerce International, which is headquarters in Paris. It is 101. It is a Uniform Customs and Practice of the Documentary Credit 2007. It is under UCPDC 2007 and revisions ICC publication 600 operative from which date it is? So UCPDC operative from which date? It is from 1st July 2007. B is the correct answer. Uniform Customs and Practice, that is UCPDC 600, rules are applied to which LCs? That any LC where the text indicates that is subject to this rule. That means in the letter of credit as per UCP 600 it will be mentioned, or as per latest UCP directions. So C is the correct answer. We will go with C. 103. Under UCPDC 600, the documents are to be presented by or on behalf of the beneficiary for payment not later than 21 days. 104. As per Incoterms 2020, the seller delivered the goods and pays the freight free on board. A is the correct answer. Answer 105. An LC is issued in favor of the ultimate supplier of beneficiary on request of the beneficiary on the strength of the original LC. Already I have told you the back-to-back LC. Here answer is D. Confirmed, already I have told you what is confirmed LC. Irrevocable LC. Whatever LC we are discussing under UCPDCs, all are irrevocable LCs, and revocable we cannot issue LCs nowadays. Red clause LC means where pre-shipment clauses are there. So 105 we will go with D. 106. An LC provides pre-shipment credit as well as warehouse storage facility. It is green clause LC. So answer is B. Mrs. Vishal Export House received letter of credit for export of jute bags to US, but the expiry of the date credit is 15th August. Tuesday, in the case of the documents for negotiations can be submitted to the negotiating bank, because your holiday 15th August is predetermined, it is a holiday. So, which should be the date? 14th August, it should be the answer. Succeeding banking day. It should be a banking day. 108. In case of import bills calls for Lloyd's, it is A. A Lloyd's clause, it is a certificate only for the, it is actually given for the seaworthiness of a vessel. So answer is A. Now we are coming in case of import calling for the SGS is the inspection purpose of the goods, inspection certificate. It is, answer is A, it is 100 lakhs. As per foreign exchange regulations, importers can receive import bills directly. It is answer is D, $2 lakh. As per Article 14 of UCPDC Uniform Customs and Practice for the documentary credit, a nominated bank acting as a nomination, a confirming bank, if any, an issuing bank shall each have a maximum of how many days? It is C, it is 5 banking days. If it is a presentations, you have to within 5 banking days, we have to send the determine as a presentations is complying. So 5 banking days is the correct answer. 112. Purchase transactions by banks in the context of foreign exchange means what? Purchase means foreign currency, converting foreign currency into rupees. Your customer has sent $10,000 by way of telegraphic transfers. You have to think as a banker. As a banker, we have to purchase the foreign currency and convert it into Indian rupees and give a credit to the customer's account. So answer is B. In respect of sale of purchase of foreign exchange, which following principles would be followed? Buy low, we have to buy low and sell high, then we can make a profit. D is the correct answer. 114. The forward rate of dollar being quoted by a dealer at a premium. Among the following, which will be benefited? Benefited is A. Exporters will be benefited. It adds a premium. So exporters will be benefited. And exporters, Mrs. Visual Trading submits an export bill in US dollar for negotiation under letter of credit. This is very vital. Under letter of credit, as a dealer, which rate you will apply? Which should rate? It's a bills buying rate. A we should apply. Which of the following methods apply to quoting the foreign exchange rates in? We apply here its direct rate. Suppose your US dollar 1 is equal to 73.20 rupees. So your dollar is a constant, foreign currency is a constant here. Your rupee part is changing. It is called a direct rate. We will go with question 116D. 117. An establishment is authorized by RBI for dealing in purchase and sale of foreign travelers checks and foreign currency notes from and to the foreign tourist. Answer is C. Fully fledged, we call it fully fledged money changer. 117 will go with C. 118. An exporter, Messrs. Shinghania Agencies, approaches to an authorized dealer for negotiation of a document under letters of credit in euro. It will be categorized at what type of transactions? It will be categorized because it is under letter of credit, documentary letters of credit. So it will be categorized as negotiation transactions. Your answer is A. 118 will go with A. Now 119. What is the future value of the currency is lower than the spot value? The currency is said to be discount. Its currency, it should be at a discount. Answer is C. Now we are coming to a questions 120. Association trusts receiving donations from abroad under FCRA. What does it mean? Foreign Contributions Regulations Act has to be registered with authority. So it will be with B, Ministry of Home Affairs. 121. The foreign exchange market in India operates daily except Saturday and Sunday. Saturday is a holiday there. From which time? 9 to 5 p.m. D is the correct answer. 112. A overbought position in foreign exchange of a bank denotes what? Overbought. So we will see the answer. What should be the answer? Purchase of foreign currency is more, exchange is more than the sales. B is the correct answer. So a bank has purchased foreign currency exchange more and then sale. So it is a overbought position. Answer is B. The imports into a country are more than the exports of a goods and services from the country. The imports into a country are more than the exports. Directly affect to what? It is A, balance of payments. 124. When the delivery under Forex deal is completed on the next working day from the date, answer is spot. Foreign currency rates are declining compared with Indian currency. Which category? It's a declining. It's a declining means your importer will be benefited. C is the correct answer. So here the end of my sessions. I think it will be helpful for you. Thank you. Thank you all.